Okay. Good afternoon, everyone. Thank you for joining us on our third Tech Talk. Today we have a very interesting subject, which is decentralized finance. And the topic would be how could it help SMEs get access to credit. Today we have a very special guest, Professor Mazen Al-Masri from Qatar University, who I'll be handing over the floor to now, and he'll be taking us over this topic.
Thank you, Nasser. Hello everyone, my name is Mazen Al-Masri. I'm from Qatar University. I'm in charge of a project, a Fintech project that is funded by Qatar Foundation that we started about a year and a month ago. And today one of the items that we've progressed on decentralized finance, on credit scoring, will be presented to you. We'll show you our progress and we'll show you the ideas that we have in mind. So basically, one big part of our project is to support SMEs in Qatar. We all understand the situation that SMEs face, whether it's globally EDCC, almost very little percentage of lending is going to them. When we look at Qatar in general, we see that Qatar is ranked relatively in the middle of all countries in terms of financial inclusion. These numbers have not changed drastically in the past 8 years. So we're ranked 55 worldwide in terms of financial inclusion. Now, what are the alternatives right now for SMEs? The past year we've seen a huge, enormous growth in DeFi applications, decentralized finance. In fact, there was a 23% growth only in 2020, which is a phenomenal growth. And currently we have, in fact, this number might have changed in the past month or so. Currently we have about $25 billion. I remember recently I saw another report that showed $69 billion that are locked in smart contracts in decentralized finance platform. So what is this new phenomena of decentralized finance, and how can we compare it with other, blockchain or fintech applications? If we ask people in fintech what is decentralized finance, some of them would answer us it's an ecosystem, and some others will call it a phenomena or a movement.
It is a movement because the idea behind it, the aim behind it, is to include everyone. Is to not allow any centralized system to control who has access to finance and who doesn't. So decentralized finance is basically a peer-to-peer ecosystem that allows direct transactions, direct interaction between everyone. Anyone could access it. It's an open concept. It's not a centralized blockchain, decentralized blockchain, and allowing whomever wants to provide funds, whomever wants to gather funds, whomever wants to exchange value to use decentralized finance. So I think the benefits of decentralized finance fall from blockchain in general, but they have some other features that are more specific to DeFi. So it's a permissionless environment. It's not so it's one section or one subset of the DLT environment that could be permissioned or could be private. This environment is a decentralized and permissionless environment, allowing anyone to join in. Other characteristics of blockchain fall under DeFi as well, such as immutability. We understand the value of immutability in financial transactions and transparency of transactions. What differentiates perhaps DeFi from other DLT environments is the idea of self-custody, which means that you don't need to, your assets, whatever your assets are, whether they are fiat currencies, or we will talk about that in a minute, or cryptocurrencies, or any other asset that you have is actually in your pocket. It's in your wallet. It's not going to leave you. Even if you have a transaction with another peer in the ecosystem, those assets remain in your custody. They do not move into a centralized platform. What came also with the growth of DeFi is the interoperability of applications, dApps, or decentralized apps, as well as the interoperability of coins. So we see, and we will talk about it in a bit, we see now Bitcoin being exchanged and moved in Ethereum environments because they wrap those coins or those cryptocurrencies to make them work in any other environment. So there is an easy movement of assets and liquidity across different financial systems. Also, it's an open source, open concept environment allowing people to build their applications like Lego and add their decentralized apps, their dApps, all together, and even improve their use and value by programming them and further developing them. So it's basically an open system, and in the past maybe 1.5 to 2 years, we saw an explosion of applications or use cases. So we see, and I'll focus a bit more on those coins. In the crypto world, one issue that we always face or we always fear is the fluctuation of currencies. So should we go in and buy crypto? And even if we want to buy crypto, what would be the use of crypto? Is it just to speculate and increase the value of our asset? Well, in the DeFi environment, crypto has been wrapped and has been stabilized. So there have been different approaches to stabilize crypto. One of them is backing them with fiat money or any other commodity. Other ways of stabilizing crypto is using algorithms. So basically, some companies, what they do is to stabilize their token. If the prices are increasing, they start selling, or they start actually pumping coins into the system. And if the prices are dropping, they start buying them back. So it's an algorithm, automated algorithm that allows stability to the market. Fiat-backed, I think we've seen many of them. A few coins now are pegged to the dollar or pegged to like the Libra, or the new Facebook coin is pegged into a basket of currencies like the yen and the dollar and the euro. Some other currencies are backed with gold. Other currencies are backed with commodities. And there is a third category of these assets that are backed by themselves. So stabilizing happens when you over-collateralize your coin. You could, let's say you have 100 Ether coin or 100 Bitcoin, you could wrap it into a stable coin by over-collateralizing, meaning getting 75% of its value as a stable asset. So those are the techniques that DeFi is using to facilitate exchange, to be interoperable between different coins as well. So anyone with any crypto could just pump it into the market, stabilize it, or buy a stable coin in its place and use it for different purposes. So those purposes could be for payment. There are a few payment platforms that are also under the umbrella of decentralized finance. Insurance platforms, different insurance products. Some insurance products are specific to the crypto world. So you could insure smart contracts, for example. You could insure your coin itself. You could have different types of insurance in the crypto world. But you could also provide usual insurance. So some other companies now are providing insurance. If you want to insure your car, if you want to insure anything, you could use those coins for that purpose. Exchange platforms, we've seen also a lot of them. And based on the idea of wrapping coins and stabilizing them, the idea of exchange now does not really cause any issues, because you can move them from one marketplace to another. In fact, some of the platforms have exchanges of over 23 different currencies and cryptocurrencies. So the movement from fiat currency to crypto is now much facilitated by stabilizing that coin. Our discussion today will be on those lending and borrowing platforms. So we'll dig deeper into that subject, but we also have those platforms that allow borrowers and lenders to exchange for interest for additional value. Those platforms are also being used, or these DeFi applications have also been used as asset management or a saving account. So people who want to keep their money close to them, they could move their fiat currency to a stable currency and keep them in their own wallets. So no more fear of banks going bankrupt, like the situation in Lebanon or any other risky situations when it comes to the financial system. And they've also been used for derivative trading or margin trading. So hedging and speculation is also being used. So we've seen a lot of innovative ideas. Today, we will only focus on the lending platforms. So lending platforms started maybe in 2018, 2019, and the big players were MakerDAO, Aave, and Compound. And the idea behind it is if you have some assets, crypto, what you could do is you could actually borrow against it. So let's say you have 100 Bitcoin. Well, you could borrow about 66% of that Bitcoin in any other currency. So once you pump in crypto to DeFi, you can lock it into a smart contract, and with that over-collateralization, it allows you to extract any type of stable currency and use it to lend and to borrow against. So this allows the exchange of fiat currency, because you have locked in your crypto into a smart contract, and you've over-collateralized it. So you could extract out of it fiat currency that you could use to mortgage your house. You could use to do whatever you want in the perhaps non-crypto world. The speed is, if you've used those platforms, if you want to request a fund, there's no applications required. There's nothing required as long as you have, if you back your loan with some other assets, some crypto assets, there's no need to have any application. So there's no KYC in this transaction. There's no AML, as long as you have that that space to do your exchange. And we've talked about this. It's non-custodial, which means it just stays in your wallet. It doesn't move out of your wallet. So this is the first generation of loan and borrowing platforms in DeFi. But the focus of these platforms were on over-collateralized debt positions. Okay, if you want to borrow, you have to borrow against some collateral and over-collateral even, not just collateral. So it's actually 150%. You have to cover about 50% in crypto of your debt. Then comes generation 2, which is a diversion from collateral. So if you want to evaluate credit, banks evaluate credits according to the 4 C's, and one of the main C that they use is collateral. What collateral can you provide us if you default on your loan, if you cannot pay back? So Aave, Farbex, and TrueFi are companies now that are diverting away from that traditional, perhaps, evaluation of credit to more trust-based or secure-based, trust-based environment. So I'll give you a few of these examples. But as this environment grows, so will the different types of applications occur. So if we look at Aave, and Aave is the first DeFi platform that provided uncollateralized loans. One of the loans that they provide is flash loan. And the idea behind flash loans is that if you have an opportunity where you can secure profit, you could actually do the transaction of borrowing and returning returning the funds back in one transaction. So you don't have to have 2 transactions. You have one transaction, you borrow and you pay back in that same transaction. So these, in fact, $300 million worth of flash loans were executed in the past year. So that was great. And what people were using this for is, imagine there is some fluctuation in other markets, and you see that you could make profit just by buying in one platform and selling in another platform. You execute that transaction in one flash loan. So one transaction that locks in your request for loan and your payback at the same time. So that was one of the early ideas of non-collateralized loans. Aave now is also, I think it was a few months ago, they came up with a new scheme where someone with crypto, with some assets in DeFi, locked into a smart contract, can delegate their credit line to some trusted parties. And those trusted parties, based on their performance, they will get interest, or they will get part of their value. But this is an environment where the lenders have to trust this the entity that they are delegating to. So for instance, for the time being, this delegation is going to some trusted parties like financial institutions. In fact, some financial institutions are borrowing through those DeFi platforms. So the idea is work with trusted people and evaluate their performance over time. Another idea by Farbex for non-collateralized loans is earning trust over time. So the idea behind it is, assume you want to borrow some stable coins, some fiat currency. The first time you want to borrow it, you have to have the collateral. The second time you borrow, you don't need that much collateral. You could reduce that collateral by a certain percentage. And this certain percentage is half the amount of interest you get charged on. So that's Farbex. TrueFi is a prediction platform. So they have stakers that look into credit applications. So here you go back to the perhaps more traditional scheme where you apply and you provide some information, and based on the information you've provided, you have some stakers that evaluate and provide with a credit score, and those true stakers, if they did not get it right, they get penalized, and if they do get it right, they get benefit from it. Also part of the non-collateralized environment comes new concepts of creating legal agreements and involving courts and law firms. So currently we have a library of contractual agreements, legal agreements that we could borrow from open law. It's a new platform that is integrated. It's an integrated platform between DeFi applications, law firms, and a digital court. So one of the courts, for example, that is most popular now is Rainan, but I've heard that in Abu Dhabi they've came up with another digital court, and these digital courts are propping up. One good idea behind this is that law firms could actually create their legal agreements through open law and use those agreements in digital courts. So the whole environment of the legal aspect is now being put in place between law firms that are now connected to Rainan Court and are using open law as the templates, if you want, different templates for legal agreements. So, okay, if we are going to use trust, and we know that the situation with SMEs is that they don't have collateral. They need to borrow and they don't have any collateral against it. Can we borrow some ideas from second generation of DeFi and implement it here in Qatar? And if so, what kind of trust can we build? What is trust in Qatar? Is it trusting the management of the organization? Is it trusted the product or service that they provide? Is it trusting the brand or the name? Is it trusting because of their behavior, their good or bad behavior? Or is it trusting because of their reputation? Okay, so those basically are ideas that we explored. How can we trust an SME in paying back its debt if we give it a loan that is not backed? Based on, I guess I can move. Based on the literature or the research, the recent research that has been done on credit scoring, we see that an alternative credit scoring model could be put in place to evaluate the creditworthiness of SMEs. And this credit score is reliant on some financial analysis of financial statements of the organization, of this SME, if they have. Their financial literacy, so the ability of them to understand finance and to manage their financial activities. So how literate are they in the financial world? Their online reputation, basically on social media and Google platforms, and their ability to pay debts. Maybe they don't have any credit history or they don't have much credit history, but they definitely have a rent to pay or a utility bill to pay or a credit card to pay. So we could rely on those dimensions of an SME to evaluate their creditworthiness. So I'll dig a bit deeper in this. So in terms of financial analysis, what we could do is we could look at their financial statements, their balance sheets and income statements and everything they could provide us in terms of finance to evaluate their liquidity, their financial structure, whether they're reliant more on debt or on asset, their profitability and their efficiency and their financial efficiency in a way. To do that, we could use OCR, which is a technology that reads and interprets documents, scanned documents. So it's a character recognition, an optical character recognition technology. So just based on their upload of different financial documents, this tool that is almost finished in development reads and interprets these statements and evaluates certain credit characteristics. Their financial literacy, how much of finance they understand and comprehend, and how much of their financial activities are standardized and put in place. So their behavior, their attitude, their skills, and their knowledge. To do this, to evaluate this, we've just finished collecting data from 350 SMEs in Qatar. And our idea is to understand, hi David, to understand whether they do they do their financials correctly, and what happens with their ability to secure loans. When it comes to online reputation, at least this is current. We have not progressed this more than that. We go on social media platforms like Instagram and on Google, get their rating, get their followers, understand the interaction between them and their followers, see the recency of interaction, see the negative points, positive points, and we gauge different attributes to evaluate their reputation online. So when it comes to reputation, it's not just whether they rank well or not, it's a history of reputation. We're looking at the growth of their followers, we're looking at the growth of their interactions and the nature of these interactions. Lastly, their ability to pay bills. Here we could work with the credit bureau. We are in progress of having an agreement with the credit bureau to see if we could get some information about their credit history, of companies' credit history. But we also rely on documentation that they provide. So for instance, if they've been in business for the past year, provide us with 1 year of Kahrama bill or Ridu bill or whatever, and then we also analyze it using OCR technology, interpret it, and extract from it different attributes to measure their credit score. So we look at those 4 dimensions, and every dimension has different attributes. We collect this information, and using this information, we could create a credit score. And this credit score is going to be different than the traditional credit score. It's not dependent on their collateral. It's dependent on their reputation with their customers. It's dependent on their actual financial literacy, their behavior, their usual behavior. If they always pay their bills on time, and they always pay their rent on time, we could assume that they might also pay their loans on time. So we'll take a scenario where someone, a small company, wants to get a loan. They provide the documentation and information about the business. We use all this information. We interpret it using OCR technology, and we put this information on a block. This information that they provided us will go through a fraud detection algorithm to make sure that it's not a fraudulent business, it's not a fraudulent transaction. Afterwards, we go online, and through APIs, we go and collect information about this business from social media platforms. We put this all together in order for us to create a credit score, and we share that credit score with stakers to validate it. And then we provide that credit score to different lenders who will or will not provide their funds. So based on this credit score of this SME and the amount of debt they request and the interest they are willing to pay, those lenders, whether they are private investors here in Qatar, or whether it's a financial institution like Al Jazeera Finance or QDB, they will provide that loan. So the question here is how, I'll go back to this slide, how will we know the importance of every attribute here? What is more important for the credit score? Is it the online reputation? We understand that, when we go to a bank and we request a loan, what the bank looks at is history, and that history might be a bit dated, right? If a small company or a company has issues and they go request loan, those issues will not be very obvious in their financial statements. It's a bit dated. But if we go to the social presence and the online presence, we are able to get up-to-date information. We will know if there is any issue with the organization when it comes to the products, when it comes to customer service. So, but how do we know which dimension is important than the other? That's basically where we are right now. Our technique is to use a methodology, research methodology called AHP, which is a way to rank the importance of different attributes. We have 16 different attributes until now that will help us evaluate the credit score of a company. Our situation now is which attribute is more important. So with this methodology, we're going to back to the industry, and we're going to go ask experts to rank them, and not only rank them, giving them these 16 attributes and telling them which one is more important, just comparing each pair with each other. So we give them pairs, and we tell them which one is more important. But we give them different pairs from these 16 attributes. And based on the feedback that we get from the experts in the financial industry, whether it's local, whether they're local or international, we'll be able to put weights on every attribute. Karma was supposed to be here. She's in quarantine, so I will take over on this. As we said, that the evaluation of these attributes are going to be subjective. We're going to go to experts in the field and ask them we're going to do pairwise comparison of these criteria. And based on the comparisons and the feedback that we get, we'll be able to find out which attribute or which dimension is more important than the other. To collect information about these SMEs, we could go in two ways, and we should go in two ways. One is to go into these data partnerships, so go to the social media platforms, go to the credit bureau, go to the utility companies like Ooredoo and Vodafone, and ask them to provide us data on these SMEs. That would be one approach. Another approach is to have them to voluntarily submit their data. So submit your utility bills, submit your financial statements, submit different statements, and using OCR technology, we will be able to interpret them. So there's two ways of doing it. Currently, we are in the voluntary data submission. Our tool works, so it's already created to connect with, for the time being, Google and Instagram. It also reads and interprets those bills. So we for the safer, to be on the safe side, we've done the voluntarily part work, and now we are in the process of talking to the credit bureau to see if they could provide us with some credit history. When we talk about reading OCR statements or using OCR to read financial statements like invoices, like general ledgers, like income statements and balance sheets, we'll be able to extract from them different financial measures like profitability, efficiency, revenue, net growth, debt to asset, different measures of their financial status. Again, when it comes to social reputation, we understand that if I want up-to-date information about a company, the best place to find this up-to-date information is not in their statements and in their public statements. It's actually in the social media platform. So we will be perhaps ahead in terms of evaluating their financial status. So based on the input that they will provide us, and based on the model that we've created using AHP methodology, we could provide scores. We'll be able to provide a credit score of that SME. And using this credit score and the profile of the lender, we could share that credit score with the lenders. So lenders that are perhaps risk averse will see that credit score in a different way than lenders that are risk takers. So we are going to match the profile of the lender with the profile of the borrower. If the lender is seeking a high risk, high return investment, then they would see different results than from lenders that are seeking, low risk investment. So basically, we are helping the SMEs to start building their credit, start building this credit score that never existed before, just by involving other ideas that is moving away from collateral and credit history, helping them build their credit history using other approaches. And the model that we will be building is not going to be a static model. It will be a dynamic model that will continue to learn. So, for example, the importance of every dimension in the credit score is not going to be, the weight of every dimension is not something that is fixed. It will continue to learn from the behavior and from the results of previous transactions. So, I guess I talked too quickly. I'm almost finished with the presentation. Yeah, well, I have a few more things to say. So what stops us from doing this? What is the catch here? Why are we not moving into the DeFi world that quickly? Just to highlight the fact that those platforms now are being regulated. So, for example, we have many active authorities like the SEC and also the European Commission, the Monetary Authority of Singapore. They are all certifying and providing the legal framework for these DeFi platforms to operate. So yes, DeFi started in a non-regulated environment where different problems could occur due to money laundering or not knowing your customer. However, today's DeFi are getting regulated, and even the coins that are being generated in DeFi, like the stable coins, are now accepted and approved by different financial authorities. So it does challenge the state-based system because it's fully decentralized, but there is now an oversight of governance on top of it. It's a bit risky because you are automating different activities and you are removing the human aspect in terms of scrutiny into a more digital or machine learning scrutiny. So the piloting of such projects has to be very careful. We cannot open it up to the whole world or to the society here if we don't stage it very carefully. Yeah, so that's basically it. There is a need to regulate any DeFi platform that we could come up with. We have to be able to enforce the law. We are working in non-collateralized environments where if someone gets a loan and could not defaults on the loan, there has to be some legal framework to protect the lender. As I said, DeFi platforms of today are integrated with the legal framework and the legal templates. They are also integrated with the digital courts, and those courts and the digital law is being used by law firms. So if we want to create a functioning environment, legal firms, law firms, and the governments have to be involved. They have to be involved in approving such financial transactions. While we're developing such technologies, there always needs to be a balance between overprotection, perhaps, and usability. So we need to balance the protection of the investor, but at the same time, we need to find a way to advance this technology. And this is always something that we will face. There will always be some risk that we have to take, but at the end, this risk might be, if mitigated, if managed properly, might still be to the best of the society. Perhaps incremental development, stage experimentation, maybe experimenting with SMEs and lenders that we trust at the beginning is a good idea to start with. Those DeFi platforms, again, when they started in 2017, 2018, they were not legislated. However, today, there has to be jurisdiction licensing of these projects. So you see some DeFi platforms being licensed in different countries because they operate in different spaces. So the way we see it is, although it's a decentralized environment, nationalization is a must. We still need to look into those platforms from a national perspective, not from a company-based perspective. There has to be some oversight from government. I'm done with the presentation, and if you have any questions, I'm here. Thank you.
Nice presentation. So I think like lending in most countries and most jurisdictions are still a regulated business. So you have this very interesting dynamic. For DeFi to gain real credibility, you need the blessing of the regulator. But once you have the regulation imposed on very new things such as DeFi, it will probably push up the cost, erect barriers for the micro and small, medium enterprise to really access things to lend. So how does the industry solve this dilemma?
So your question is, if we're going to provide a legal framework for those companies to operate, the cost of operation will increase.
So for those companies to have real credibility, they need the blessing of the central bank or the regulator. Once the regulators start regulating a specific sector, then all of a sudden the sector is no longer that accessible.
Yeah, maybe we'll just focus more on what is being regulated. What is being regulated right now is the asset itself. Right. So the currency that you are using is regulated, and also the type of transactions that you do. But the lending and the borrowing remains the same. You will have new dApps, if I might say, decentralized applications that will provide new schemes of lending and borrowing, okay, such as what we saw today. But from this second generation of DeFi, what we see is regulation through law. And regulation through law means you inscribe your legal agreements and you inscribe it using a legal framework by law firms and courts. So I know that in Qatar there was an idea to have a digital court. I think it's ongoing, this idea. So by legalizing the transaction, this is where you put where you regulate. You don't regulate the borrower and the lender, but you regulate the transaction. Okay. So regulating the coin itself and regulating the exchange of value. In this sense, it's the lending and the borrowing. In terms of cost, I'm pretty sure that operational cost will increase by regulation, but this is the price you pay if you want stability, right? If you want to have a stable financial environment, you will have some extra overhead. But I don't think it is comparable to the traditional form of regulations. Even when there are disputes, if we go into the legal activities that happen in digital courts, those legal activities are also automated. So we're automating the financial transactions, and at the same time automating the legal disputes and the legal agreement processes.
Yeah, can I ask a question? So, what I really like about your presentation is obviously we move from centralized to decentralized financing. Within the centralized financing, SMEs did not have enough access to financing. So the decentralized financing will come up with a solution because there will be lenders who would like to accept your credit scoring.
Mm.
So could we already, this will take time, but could we already use your credit scoring and give that credit scoring to, let's say, QNB or Doha Bank, say, guys, this is a different model. You can already use that, and well, not blindly, but you can allocate some money and give it through that model to the SMEs.
Mm.
Then we don't have decentralized finance yet, because it will be still money from a bank, but we could solve the problem of the SMEs quicker.
Yes, correct. Now, the credit scoring component that is under development is not necessarily a component of decentralized finance. It is a supplementary component to provide DeFi platforms a credit score for the lenders and the borrowers to work with. So yes, this component could be used by any financial institution. And maybe I didn't highlight it today, but we are in the process of writing an MOU with Al Jazeera Finance. And what Al Jazeera Finance tailors its services to small and medium enterprises. And what they are currently doing is working with small companies and helping them build their financial statements. In fact, in order for them to understand their creditworthiness, they are working with them to build their financial statements. So we would like to work with such companies and perhaps evaluate our credit scoring model. We are not ready yet to provide a foul-proof component. It has to be done slowly. So I don't think the banks right now will be ready to utilize such innovation until we provide a proof of concept of usability, at least. So, but yes, I agree with you. It could, and I think the world is moving into that. It's not new to see that investors now they want to invest in new companies and new ideas. Venture capital companies, they would like to see some innovation happening and they want to invest in this. So maybe by looking at social media, maybe by look at management, how they manage this company, we could get more insight on what this company could do and could not do.
Maybe I'll ask a question fast. I think what I understand here, there is a lack of element of certainty when it comes to these SMEs, because the regulator is a little bit scared of trying to get them involved because we don't know exactly the risk yet. So would you say that potentially if we use, for instance, a sandbox approach to this, it could be helpful to provide certainty to the regulator so that we can move forward? Because from what I understand, it's that the element of uncertainty is the main problem here. So
yes. The way we see this being rolled out is by known players. If let's say we approach QDB and ask them for a pool of fund, and we use, like Ave has used, delegators to this fund, and so when you create a hierarchy of decision makers and you start slow, you could every decision maker from the top of this hierarchy to the bottom is going to evaluate the layer below it, all the way down to the lowest layer where you are evaluating the borrowers, right? So with delegators, you can pick and choose what works and what doesn't work, and adjust your decisions accordingly. But it has to start with a controlled environment, a controlled environment with let's assume 10 companies that have been refused funding by QDB or by any other bank that we believe they score high in according to our model. And if they score high according to our model and score low according to their model, let's try to see if we could work with them, and then evaluate the output of this collaboration or the output of this transaction over time. That's how I see it happening if we are to move into that space. And in fact, if we look at the DeFi lending platforms, this is how they started. They started with over-collateralization. We don't want any risk, right? And that worked well, and now they want to grow, and they're moving into non-collateralized schemes.
Yeah, because the SMEs will not have any collateral. I think that's
Exactly.
one issue.
Yeah. Yeah.
So is there any country that you have as an example or like a role model? From which country can we learn?
You mean DeFi?
So DeFi and
Yeah, well, the United States has quite a bit of DeFi, I'm talking lending platforms that we could learn from. Aave is an Israeli company that has grown from a few $100 million to now $6-7 billion in what they call it locked-in smart contract. Locked-in smart contract means money that is locked into their smart contract. So I think it's not the idea is not to learn from countries, but learn from examples of successful DeFi platforms. The growth was not normal of these platforms, and nowadays we see people who are checking how much interest they made on their crypto. So buying crypto and putting it in a pool for lending is now the normal thing for crypto owners, the ones who have crypto assets. That's how they are making their money. And some of the pools that they invest in are high-risk pools, earning them 7-8% interest, and other pools are low-risk pools that are earning them 0.5% or 1 percentage point. So yeah, I think there is an opportunity there to connect, and and I think in Qatar, it's easier to test it. The community here knows each other. If I want to know if I should invest in a small enterprise, I could just on the way back home, I could pass by it and take a look. We know each other's names. We know who owns which company. We know the people we could know the people who work there. So reputation is yes, it is. We're relying on social media, but we could also rely on our own subjective evaluation of this SME. So I think the geographical space that we are working in facilitates testing such a platform.
Excellent. Do we have any questions
Yes,
from?
we have one question from Nabil bin Isa.
Hi, Nabil.
He's asking if your project were to go live today, which restriction do you believe it will accept and allow it to go live?
Which restrictions?
Jurisdiction.
Which country?
Which jurisdictions?
Yes.
I think it has to start here. It has to start in our region, and if we are to evaluate it, we have to evaluate it locally before moving globally. And I think there would be a major need for support from our financial sector here, especially QFC and QDB. Without local support, all this work will be prototyping and just providing some proof of concepts for research and for academic work. There needs to be local support for that. And I think by involving law firms at the same time to provide the legal support of such transactions and the scrutiny of legal agreements, we could help push that further.
Yeah. So what? But still, we have the issue that there is a lot of data, but that data is not used to help build the credibility of the SMEs. So still, if these numbers are correct, 90% of the SMEs don't get any lending.
Mm.
So how to with companies like QPay of Nabil, they collect data on a daily basis on how many people do transactions with the SME, do they pay their electricity bills, etc. So there should be a mechanism to use that data and to convince the local banks. It has to start somewhere, QDB or the local banks, to say, okay, guys, we will put 1 million aside. It should be relatively low amounts, and give access to the SMEs. Short-term credits, even 1 week, 2 weeks, 4 weeks max. That then, with your credit model, even if it's not perfect yet, we should be able to do it.
Yeah. Now, we will rely on data that we are currently collecting from these SMEs. So the data has been collected from 350 companies to understand their literacy and to understand if they've been able to to get credit. This will allow us to evaluate the importance of such attributes. So the model that we are building is a theory-driven model backed by data collected to evaluate it. But the data will come as we go. As the platform goes live and we start executing transactions, this data will be reused to improve the accuracy of such models. We will also work with a financial institution to compare their credit score with our credit score, and Al Jazeera Finance, one of the items in the MOU with them is to do that, is to evaluate whether our credit score is comparable to theirs, and if it's not, what were the attributes that diverted the similarities in credit score. So yes, I agree with you. There will be a lot of evaluation to be done. Moving forward on this will require prototyping in real environments here in Qatar with SMEs in Qatar and with lenders in Qatar.
So we have, so Nabil commented, DeFi is based on cryptocurrency. Isn't crypto illegal in Qatar?
Yeah, Nabil always asks the difficult questions. I guess that's why we need QFCRA. If we look at crypto, there is the usual crypto, the Ether and the Bitcoin, and there is the stable crypto that right now we could take another look at crypto and see if this type of cryptocurrency is going to be accepted. I could go with the discussion or with the argument that crypto is not safe. I could go with that argument. I could say, yes, you're right, Bitcoin is not a safe investment to invest in. It could go up, it could go down, it could crash. We could go in any direction. But if I look at crypto like DAX or like USD crypto, those are backed by dollars. So for every dollar or for every crypto USD, there is a dollar aside for it to back it up. When we talk about commodity or gold-based stable coins, it's the same situation. So you will see those stable coins fixed. They don't move. They don't go up and down. They are pegged to the dollar. They are depending on the type of stable coin being used. But I could look back over the past 2 years and see those stable coins not fluctuating the way Ether or any other coin is fluctuating. So we need to take another look at those stable coins, and we don't have to use stable coins. The idea is not, the idea of using a token is just to be able to perform our financial transactions digitally. It's not about the coin itself. We could create a coin and put a real aside for it in the bank. And then we don't have to call it crypto. We could call it a token, right? We'll work with tokens. So yeah, there will be a need to approve the use of digital currencies, but not necessarily cryptocurrencies.
Thank you very much.
Thank you. Any other questions? That's it. Thank you all for listening, and hope we'll have another discussion on this in the short term. I think in about a month, we'll be able to provide a prototype to showcase it. Yeah, we have the technologies in place, and the technologist is just behind you here. He will help us. Ensure the platform is